Good afternoon. Welcome to July Director's Cut. Thank you for tuning in. We will begin with Department of Mineral Resource Assistant Director, Mark Bohrer.
As Bridget said, my name is Mark Bohrer. This is my first director's cut, and I guess it's the first assistant director's cut. Before I get started, I'd like to express my gratitude to Len Helms for all his 26 years of service, his guidance, and his mentoring. And I'll just start out with a brief highlight that people are probably interested in the hiring of Len's successor. For what I understand, the search committee is going to meet this Friday to select finalists, and they're going to conduct interviews at the July 30th Industrial Commission meeting. With that being said, we'll dive into the numbers. This is, as Bridget said, this is the July 2024 Director's Cut with the May 2024 production numbers. The oil production, daily production was 1.195 million barrels a day. That was down approximately 3.9%. That was a little surprising, but likely due to the road restrictions that were probably still in place in May and lower than expected completion numbers that we'll address on the next page. Crude oil price remains strong, virtually unchanged. Gas production was up slightly at 0.5% increase. The GOR overall is still increasing. So we're at April, we were at 3.49 million cubic feet a day. Billion cubic feet a day, excuse me. Wells permitted. June we saw 78. That's a little lower than we'd like. We feel we need to be in that 90 to 100 per month range to grow our production at that 1 to 2% level. The rig count has been steady. That's good news. The completions, 55 preliminarily in June. That's a little lower than we'd like to see. We feel we need to be in that 90 to 100 range to achieve that production growth. We're now at over 19,000 producing wells, 19,079 during May. That's a new record. The initial IIJA initial grant, we've started up reclamations again in April. Some jobs have been completed, but they have not been paid out, so they haven't showed up on the report yet. Oil production on the reservation, it also was down a little bit, approximately 5.6% in line with what the rest of the state saw. The drilling rigs are down 1 at 2. They got 20 wells waiting on completion now, so those should bring those production numbers up when those wells get completed. Couple of comments. There are 14 frac crews currently active in the state. The statewide gas flared volume from April and May increased 5.2 million cubic feet per day to 167.6 million cubic feet per day. The gas capture rate remains strong at 95%. The overall Bakken gas capture decreased from 96 to 95%, just a normal fluctuation. Statewide gas capture is very strong, statewide at 95%, statewide Bakken at 95%. Non-Fort Berthold Bakken is at 95%. The Bakken on the trust percentage on the reservation is at 97%, and the fee is at 95%. In the fields you see below that, those are just different areas of the state where there's typically been some issues with gas gathering. 11 of those fields saw a nice increase in their gas capture percentages. There's a few that were down just a point or two. So overall, the gas capture throughout the state is in a good position and steadily increasing. With that, if there's any questions?
No, I didn't.
Not giving online.
I do. The Assiniboine field, where is that? That's 100% captured.
Assiniboine. I'm going by memory, but I believe that is in northwest McKenzie County, based on the fields that are around it. But I'm not positive. I'd have to double check on that.
And you said that it wasn't what you expected because road limits, weight limits are still on the road, correct?
I'm speculating that's one of the contributing factors as to why our production was down. And there was a significant, a fair amount of rain in May also, which likely slowed things down. The road limits are, they're really impactful on the frac crews that are out there because they have to move around. It's not like a drilling rig where they can sit on a pad now and drill multiple wells, not have to move, get out on the road or anything. So you need a lot of truck traffic to move those frac crews around.
Yeah, so I've got,
All right, thank you.
Thank you.
you're getting off easy.
I appreciate it. Be nice to win my first baby. Ready?
Yes, please.
All right.
Now we have up Director of Pipeline, Justin Kringstad.
Thank you, Bridget. So Justin Kringstad, Director of the North Dakota Pipeline Authority. Good afternoon to everyone. We'll get right into some production updates from our neighbors to the west and to the south. Montana, continuing to see just some gentle upticks in their oil production. Again, that's meaningful oil and gas that enters our entire network for crude oil, natural gas liquids. We're constantly watching what's happening there and how they interface with our North Dakota systems. South Dakota lagging a little bit. They have not had a drilling rig active for quite some time, so I don't anticipate any type of growth. Eastern Montana still hovering between 1 to 2 drilling rigs at any given time. So I'm expecting them to continue to stay relatively stable to slight growth here going forward. As we move to slide 3, the one thing that stuck out here right away to me was on the gas oil ratios. That's the bottom section of this chart. We did hit a record level for gas oil ratios and approaching that level of 3. And then the anticipation is that over time, now we're going to continue to see ebbs and flows. So we may see this again cycle up and down on its upward general trend here in the coming years and decades ahead. And then on the production side, just those month-to-month changes, both in oil and natural gas. So along with some of the comments Mark made about some of the reasons behind it. One thing that I always look at in Mark and Lynn's reports every month is the number of wells that get completed in a given month. And we see numbers here in the 50s and 60s, and typically you want to see numbers consistently in those 60s to 70 plus well completions a month for some type of kind of meaningful upward growth trends. And so until we can get into a period, again, the road restrictions, the winter weather, all of that complicating those completions actually getting done. So I'm expecting here, though, the second half of the year, we'll see those completion numbers uptick, and then we'll see the production following suit. On slide 4, just a quick snapshot of where we were at in May for how the North Dakota and the Williston-based crude oil was being transported to refineries around the nation. And then those trends on slide 5. The one thing you'll notice we did see here in the recent month or two a strong dip in that Brent WTI spread. That typically favors pipeline movements. When we see that Brent WTI spread higher, that typically favors some rail movements. So we'll see in the coming months if we see any type of fluctuations there as a result. And then on slide 6, just taking a peek at what those refineries centers were paying around the country. So again, a pretty healthy spread though between Pad 1, Pad 5, and then us here in the Pad 2 region. We'll talk here in a moment about some of the dynamics that was taking place again with those price hits due to congestion and concerns up on the Canadian side and how those barrels interface with Bakken at the Clearbrook market. When we look at those rail movements, no major changes, still right around two unit trains per day leaving the state, heading again primarily to the West Coast, Pacific Northwest in particular, and then still some movements over to those Pad 1 refineries on the East Coast. Pricing, we were seeing, again, my comments about the TMX, the Trans Mountain Expansion Project up in Canada. That delay and subsequent in-service causing, again, some wild swings over the last 6 months in Bakken pricing. Here in the last couple of weeks, we've seen Bakken pricing again taking a little bit of a downward slide. And so at Clearbrook, which is our closest major hub, had a negative 61 cent relative to WTI pricing there. And then you can see the Brent WTI spread now just over $3. So quite narrow from what we've seen over the last handful of years. No major changes on the imports, exports, nothing really to discuss there. On the gas flaring that Mark was referencing, again, no major changes on why that gas was being flared. Majority of it's still coming from locations that do have pipeline connectivity. Again, the challenge being with moving all the molecules being produced from those locations ultimately to a gas plant and then into the transmission system. But again, the good news from a trend perspective, we've been very, very consistent at this 95% capture, which is incredibly encouraging. Even as you see the upper portion of this graphic, those gas volumes continue to march forward. We certainly will be hitting record levels of natural gas production here in the coming months. And so keeping an eye on this is going to be critical that as gas volumes grow to new high levels, that the infrastructure is capable of keeping pace with that. And one of those indicators that we watch to discuss that is how many wells are getting connected to gas gathering in a given month versus how many new wells are producing gas. We did see in May the spread there, which is not something we want to see. We want to see that black and red line stay consistently together. That means wells are getting connected as quickly as they're coming on. Again, 1 month doesn't make or break the scenario, but if we start to see some type of trend, that's when things become certainly more concerning. So we'll keep an eye on that in the coming months. The positive news being that for right now, gas capture numbers and things are staying consistent. The EIA, their latest oil price outlook, they did see an uptick, or they put a higher price outlook, about $2 to $3 upside from what they had in that June level. If you're interested, you can go to their website and get all the details of what they're seeing on a supply and demand and their logic behind that. On the gas processing side of the world, again, no major additions yet. There's a lot of discussion right now about when and what type of scope some of these new processing facilities will need. That is, again, with the forecast that I'm putting out, that will certainly be required here in the coming years as gas volumes continue to chug upward. On the interstate transmission side, again, this just a reminder that when we look at that May timeframe, we were still coming out of some of those compressor maintenance projects on the Northern Border pipeline. You can see kind of in parentheses what the ultimate impact was to transmission capacity during that time frame. So that was another thing in that May timeframe. We had, again, winter weather, road restrictions, lower completion numbers. We had challenges on the midstream side. Even into that June, July timeframe, we've had some gas plants going through some maintenance work. And so there's just some of those logistical things that have been challenging here going forward. And so as part of that, we've seen a slight downward tick in that market share between how much Bakken is getting on the Northern Border pipeline versus Canadian. That's just a result of overall trends and how gas is being produced and marketed out of the basin. One thing we've seen those BTU levels stay down as we continue to see market incentives to move ethane in the NGL stream, which keeps the ethane outside of the Northern Border pipeline, which drives those BTU levels down. So that is, again, just a function of what the market is doing at the current time. And then lastly, just a quick update. I'll probably do this here routinely until this system goes into service. This is the Wahpeton expansion project, the latest construction update that gets filed. You can see just, again, a couple of the graphics there, the right-of-way work. That bottom left is pipe that's already been installed and basically not at the reclamation, but getting ready for the reclamation process to begin. Certainly for those in North Dakota, we know that this is some of the world's best fertile agricultural land, and so that reclamation process is going to be absolutely important going forward to make sure that the productivity is returned as quickly as possible. And then from that table on the bottom right-hand side, just where we're at in the total process. So some of the big steps, the pipeline right away, clearing, grading, stringing out the pipe about a quarter of the way done, and then they'll get into the actual bending, welding, and then lowering and the reclamation side of the project. So we'll keep you updated with that. Again, that's an exciting development that'll be completed by the end of this year. So Bridget, with that, I'd be happy to answer any questions.
Going to what you said in the industrial commission a few weeks ago.
Yes.
About the need for storage. Is there any movement of that you've seen?
No, I'll bump back. So let's go to slide 17. For those online, the question was about storage. That is something that is in most discussions right now with midstream participants, is how storage may play an increasingly important role in our midstream development. We're seeing more interest for in-state demand for either power generation or other industrial uses. And in order to mirror that demand side with the production side, those don't always work perfectly. They don't mesh together exactly when the producers want to produce and when the demand side wants the product. And so storage is going to be a critical component going forward. And that is essentially a staple in all the conversations right now about how that could play a role.
This is an off-the-wall question. I was going to ask it.
Yep.
Can you use formations, land formations, underground formations to store that natural gas now? Or are you looking at, building tanks or something like that?
Oh, very good question. So the question was, how is that gas stored and can it be done in the subsurface? What type of geologic features make that advantageous versus, on surface storage? So if you notice in that southwest corner of this map, it's right along the border of Montana, North Dakota. That's an existing natural gas storage field. It's the U.S.'s largest single gas storage field. Is right here in our backyard, and that has the capability. It's an old depleted natural gas reservoir. So that was a gas producing field. They then converted it for storage, where they'll inject and withdraw, typically now on a seasonal basis. But the ability then, right now it works incredibly well for what we need for our typical kind of regional needs seasonally. It's not currently configured for some of these large end user projects coming up. And so, what that would look like is additional pipe capacity to and from that storage facility, additional upgrades at the storage facility with new wells, new compression, some of those on-surface facilities. But yes, everything from a storage perspective is in the subsurface. And then again, likely targeting this existing asset that we have here in our backyard.
And is that in North Dakota or Montana? Or?
Primarily in Montana. Yeah, they call it the Baker storage field. So yeah.
There's one question.
Okay.
Do you expect June production to recover from May?
I don't. So the question was, do we expect June production to recover from May? I'm anticipating, just looking at those completion numbers. I think it'll be very similar type of levels to the May. I'm not anticipating June to be a growth month yet. July is still kind of up in the air a little bit. There's been, again, some maintenance things going on the midstream side. So I think the real growth is going to come in that August, September, October, November timeframe up until when winter starts causing some constraints.
Yeah.
What happens from the state's side of things if you can't keep capturing all this gas that keeps growing?
Yeah, so great question. So what happens if we can't get the gas capture infrastructure in place? So there's historically one of two directions it could go. You could have producers decide that they're going to start flaring more gas. That is a very undesirable scenario, not only from a state and a regulatory perspective, but the operators themselves now have taken a very aggressive stance. And so that is no longer an option for most producers to even consider. They're actually looking to be more stringent than their current gas capture levels. So the other option then, if we don't have the gas capture infrastructure, is we start to see activity get pulled out of the basin, which again, from a state's perspective, is not something we want to see. If operators have acreage options in North Dakota and Oklahoma and Texas and other places, if they're starting to see gas constraints limiting their ability to operate in North Dakota, they can just move that capital elsewhere, and they'll keep their investors happy and their company moving forward. But from the state's perspective, we need to have that infrastructure in place. We want to keep those operating activities here in the state. And so that's why it is such a pressing issue to make sure that we're on top of this, from the get-go.
How does North Dakota compare to like other states from the gas capture side of things?
From a gas capture, I don't have the hard number. I know when you're comparing apples and apples, some of the fields in West Texas and even New Mexico, they have their own gas capture challenges. And typically we see it at a blended level, so it doesn't look as dramatic as it's looked in North Dakota, but it's a challenge in a lot of developing areas. We're not necessarily unique. What is unique here is that we're so far from any major markets. And so in West Texas, when they get gas constrained, which again, earlier this year, we saw negative gas pricing in West Texas because of gas constraints, but they're very near major market hubs and other major assets. And so the infrastructure build-outs and requirements are typically much easier and timely to get done than some of those areas. It's our remoteness here that is one of our biggest challenges.
There's another question.
Yep.
When you say July production is up in the air on midstream constraints, which midstream issues are you referring to?
So there's been some gas plant maintenance work that's been performed that's just been kind of, I don't want to say disrupting, but it just causes some challenges where operators will make different production decisions or completion decisions based upon what gas capture looks like in any given field. And so again, when those plants go down, operators in the past may have resulted in increasing flaring from those fields, and now we'll see a scenario where if a gas processing plant needs to go down for a week or 2 weeks, operators will throttle back production from those fields. They won't just let it go to flare like they would have, say, 5-10 years ago. Okay, well, thank you very much, everyone. Have a good rest of your day.